So let's get the arrow. So you can see this choppiness here. This is a lack of confidence. When you see price push up and then push back down like this and like this is a price probe. So the market's sort of testing how high they'll trade, they'll keep trading at. And both of these things indicate a lack of follow through, a lack of confidence. And so the way I keep that in my mind is I just imagine that, I'm a portfolio trader and I have a big account and I'm trying to fill, and, I can fill for eternity, but on a day like this, I might just fill when there's orders or something, and I'm not super aggressive about it. It shows up in these little blips like that. Right, Phil. Yeah, you can't tell if they're selling or buying, but generally, but the way it works is they're sort of eating up liquidity. And I think that in this case, generally portfolios only really buy. But if they're constantly filling, they'll do that all the way down. So you can think of really strong filling as sort of selling. But yeah, I'm sure that makes sense. So in this case, they filled all day and then through the morning, and this looked really good. This morning looked really good to see them converge with price like this. This kind of triangle right here, I really like to see that. Converge with price, beautiful. But then it all changed. So this was great. This shows me a lack of confidence. Not a lack of confidence, lack of confidence. So that's those two things. Keep that in mind. I think it's going to be important for what's going to happen in the future. The fact that we had nice strong buying this morning, and then the afternoon, as we got into looking at a growth trade, or not a trend trade like shorting, they just weren't really into it. That's going to be important. Okay, so the next thing will be to take a look at our tension here, and we have positive 2. And I want you to notice something. We got right to 0, and went the other way. So that's the kind of, we saw it here. We were able to develop, seeing the market was, showing us the bearish trend behaviors. We just did it again where it hit 0 and it hasn't gone positive. So if that stays true, that's going to be an overall trend thing that I'm going to be paying attention to. We are going to have the market close higher than it opened. And we do have tension releasing. So this is what the program's going to say is going to say tension released, and it successfully drove price higher. That's not a bearish trend activity, so that will switch the bearish trend state into transition. And if tomorrow we had negative tension release, so if this closes here and then it released and price opened and closed higher, then that would say negative tension failed, and that is, positive tension worked, negative tension failed. That will flip us into a bullish trend state. So that's what's going to be at risk if we close with negative tension here. That if we don't close with negative tension, we close flat, then we'll need to build in some negative tension before it can release and flip the market. So that's what's going on here. I think the most important thing is that we are going to close most likely flat as a pancake. And so if you remember what I said about flat tension gives power to the advanced decline. So that means tomorrow when we open, it'll be really important that we find, well, the advanced decline is going to drag us around, right? And that means when the advanced decline is in control, the market's in a different condition, but generally what that means is the market's operating under different motivations. Like the momentum trades are not going to be the kind of thing that you're going to want to be looking for. So what'll drag us out of that, is to frame this, will be as we find, let's say tomorrow opens and we have positive growth, we're going to start getting the tension's going to start moving up as that happens. And as it gets away from the zero, it's going to shift power back over to momentum, and then we'll be able to start looking at decay and stuff. So what'll end up happening, what ends up happening on these days is the market looks for growth trades. It tries to determine the trend. And so they can be very, very profitable days, because days when the market opens flat have this chance to start out with growth and then just grow all day. And you get these like bleed up, melt down, or whatever markets that can just move all day can happen. So this is setting us up for an opportunity to potentially threaten the bearish trend state tomorrow in a very real way. But at the same time, it's setting us up for an opportunity to find a growth trade tomorrow that could literally make some really excellent money, just run all day. So that's going to be really important to keep in mind when you're considering all this stuff. You know, pay attention to how the portfolio owners were acting during things, and where we are here. So if we open up, let's say the market gapped up to here, and say we had advanced decline at like 1,000. I'll just write this down on the screen. Do you know how to do the math to calculate it? I mean, it's a 20 to 1. So if we gapped up if we gapped up 1,000, we would add 50 to this. So right now, if this just all of a sudden was 1,000 or 1,114, so we got 1,000 picks up, this would be 61. But the tension number will be near zero, meaning it's going to be a paper tiger. It's just got no backbone, there's no claws, there's no bark. So you know, a positive 2,000 on this will give us this big fat velocity number. But if that 2,000 number goes down to zero, so does the velocity number. So the velocity number has no power to it, because advanced decline is going to drag it around, and we know that because the tension's near zero. So tomorrow we could gap up, we could gap down, and basically you would expect a gap up or a gap down to find like counter decay growth trade. So we gap up, I'd be looking for a negative growth trade. If we gapped way down, I'd be looking for a positive growth trade initially. You know, if it does stick around there and then finds the other way. But typically, when we have tension at zero and we gap up, you find a negative growth trade. It'll develop and set up and work out really well. Same for the other direction. So I'm expecting mean reversion type trades. If we open flat tomorrow, yes. Well, the tension doesn't have to be like super big. It could be plus 12 or 20. But when it's, I've been using the 10%. If it's less than 10%, I tend to think of it as weak, and I think that the advanced decline is going to have more power. But especially when we close at 1%. But yeah, if we just had stronger, yeah, if we had like plus or minus 60%, that would be a scenario where I would be up all night looking to buy the counter, to fade a breakout in the wrong direction against that tension. So when tension's really high, a lot of times they're overnight trades. That's one of the setups. But this is really low. We're looking for sort of mean reversion growth trades in the morning, and so we'll look for phase 1, 2, 3, and they usually on these days they set up pretty well. You just have to be aware that's going to happen. So you know, if we gap up and we see the change number up here, I'd expect the decay to go sideways and then start moving negative. New highs there should be a bunch of new highs in the morning, but they're going to be weak new highs. And then we'll start seeing new lows, and those new lows will probably trigger off, you know, the trade if we were to gap up. And we see that kind of thing a lot. So let's see if we can find one that's similar. Something like this here, lots of new highs that are weak, which sort of drive price, but the weakness tells you that it's weak, and then, you know, it would reverse back and the negative growth is going to come in. That's the kind of thing we're going to be looking for tomorrow. So we have our gap up, our gap down, mean reversion. We go sideways. If the market goes sideways, I will, same situation, and I'm going to probably rely on overnight activity and, stuff to maybe give me an idea, but yeah, same situation. So just growth trades tomorrow within the first hour. The next thing that's important is how the trend is acting. So let me zoom this out so that you can get a sense for this. If you take a look at how it was before, well, actually, let's look at the last time we were in a down. Last time we were in a down cycle like this one, right here. So you can see how this acts. So you have markets move up, and the tension stays down. It moves up, the tension, stays down. So there were growth trades in here, shorting. Might have even probably been one maybe here, but the tension stays. It always stays under zero. It never got negative, and then the market moved. So this is the kind of behavior I expect from our current trend state, and that's where we're at. So you can sort of get a feeling for that yesterday we had the market move up, tension stayed down. We had this market move up, and the tension got right to zero, but has so far stayed down. So this is still acting like that trend, and you can see that it did that here. And then as soon as that tension finally moved down, the bullish trend, that was a weakness. And then even finding, the positive tension didn't really work, and it failed, and we flipped into a bearish trend state. So that's what we're looking at with this tension, that it's still acting like a bearish trend. It just got so far it's just gotten really close. And this is the kind of activity that we want to see. We want to see this trend play out. So what